Alrighty, what is going on, Discord family, and welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is April 6th, 2025, year of our Lord, and oh boy, was it a week. It was a crazy week. I would say the Top Down Analysis was on point, but man, listen. The top-down analysis was on point, but the delivery is the one thing that I can never predict, which I always say in every single video. But the direction was good, and what we did was exactly what I thought we would do, but Lord, the delivery was crazy. You guys have been following along in the markets, which if you're watching this video, I assume that you have. Last week, we sold off about 10%, which is the largest sell-off since I think like 1987, right? .com bubble, COVID. I think this is the worst. This is the worst sell-off since 2020, which is the COVID sell-off, right? And I don't know if I'm even supposed to say that on YouTube, but the sickness, right? The sickness that came, this was worse than that, okay? Just to put things into perspective, we are extreme fear. I believe the level is at a 4 right now, which is absolutely crazy. That means that nobody wants to buy, which is why we're buying. No, I'm just kidding. But we are going to discuss the structure coming from the 3-month, the monthly, the weekly, the daily. And then we're going to give levels out on the 4-hour. After that, we're going to take a look at the volatility index. We're going to look at some of the news catalysts going on into this week. And there's an earnings period that we need to be aware of, right? That a lot of people don't focus on prior to tech earnings. But prior to tech earnings, there's a big earnings period that starts to happen. So you can fast forward the video and I'll tell you what it is. If not, stick around and we're going to get right into that. So first and foremost, as per usual, please make sure you guys like and subscribe, join, just give your support to the channel or whatever you want to do, or don't. Pay attention to the information because it's going to be good. Let's start here at the S&P 500 on the 3-month chart. Okay. What we're looking at on the 3-month chart is exactly what we talked about back in October, potentially January. We talked about this candle here giving us a very, very bad sign, right? I said, if we couldn't get back above this October 3-month candle, it was going to get bad, right? We failed right at the top of it and it got bad. We broke it. And I specifically said, I don't expect price coming back up here. I think it's going to be the low of the year, right? And I want to make it myself clear, the low of the year. Okay. I don't think we're coming back up here this year. That's just my thesis. Take it how you want to. So far, the market is supporting my thesis by putting in a lower high to start this quarter directly at the 50% mark, right? Like when I say like this couldn't be any more perfect, if you fib this out, right? Like it may not be exactly 50%, but I guarantee it's going to be close, right? You fit this out, look at that, 30%. This is about 40%, like give or take 50%. When you see stuff like this, this means that if we're starting to follow structure on the 3-month, the market's trying to get somewhere. And I guarantee I'm not going to say guarantee. It's highly unlikely that it's trying to stop right here where everybody think it's going to stop, right? But we'll see, right? Because I have a bearish, I have a bullish thesis. Ultimately, off the 3-month chart, what we're looking at is aggressive selling on the 3-month at a level that we should see a bounce from. We'll see what happens, but let's continue to look at the Dow Jones and the NASDAQ. The Dow Jones, same thesis, right? We're coming down pretty aggressively. We broke through the major low from August, right? And then just for good measure, we broke through the April lows too. Now we're down into 2023 pricing. Now, mind you, just to put this into perspective, this 3-month chart, it's only been 6 days in the making, okay? And we're already back to 2023 prices. If the goal of this 3-month quarter is to go lower, oh man, it's gonna get real ugly, okay? So these buyers right here, right? This is the moment of truth. This market, I can't express this enough. This market really needs to hold this level this week or over this next 3-month quarter. Like this level at 38,533 is the low that brought these highs. If we don't hold this level, we're coming for these wicks at 34,774. If we don't hold here, we're coming for this low at 32,289. And if we don't hold there, oh man, like listen, we can see 30,000 by the end of the year, right? Like, which will be great because I'm ready to invest, right? I'm so ready. So I've been looking for a dump like this because the rally was just super crazy. So let's move over to the NASDAQ on the 3-month chart. We can see the same thing playing out, guys. Again, we talked about the NASDAQ potentially leading the charge to the downside, and you know, everything's about at the same level, so everybody got a crazy dump. So we'll see what happens at these levels. Let's drop down to the monthly, like we're over here on the NASDAQ. Get a little closer look, because this month, or the previous month of March, just closed. And then you wanted to see April, like I said in my previous video, I really wanted to see April be what it's historically been. And it's not too late, right? We still have 24 days in a month. Historically, April is one of the most bullish months of the year, right? And it's like an 80-20 stack. I don't know if we're on the 20% side or the 80% side. I'll let you know in 24 days, right? So we'll know in 24 days where we stand. But in regards to structure, again, we did exactly what I thought we would do. What I said in my last video would take 2 weeks, but I don't know how they would deliver it. They did it in a week, okay? They dropped below August lows, then they got below April lows, and now we're back into this level here, right? Or we're getting where I think we're going is into the 16,019.25 level through roughly about 15,543. I'm hearing some rumblings that Meta's going to have some bad news this week. And if that's, oh boy, if that happens, again, this level is going to get smoked too, right? Like, I want all of this to come down, but I did not want it to come down like this. So let's move over to the S&P 500. Let's take a look at it on the monthly time frame. Zooming out to the monthly, we can see, again, reiterating the same thing over again. August, April, taken out. Gap that needs to get filled at October 2023. This was my target for May of 2025. And we're already here. So either we're about to go on a dynamic rally, or we're going much, much lower than my target, right? So looking at the Dow Jones on the monthly, you get more of the same, right? You zoom out to the Dow Jones, again, August, April, taken out. Huge gap that needs to be filled here in October. Dow Jones is a little further down than everybody, right? But it's a huge gap that needs to get filled right here, okay? So before we go into the weekly, before we go into the weekly on the Dow, I want to look at the weekly on the S&P 500. And for that, we're going to turn it on. We're going to start to pay attention to the 200 EMA, right? Because I told you guys in my previous video that this was a very dangerous level to get to. The 200 EMA on the weekly time frame is probably one of the most strongest levels in a bullish market, or in the market period, because we rarely get here and don't get a bounce, okay? This is why this is a make or break level, because we're here, right? Like, I didn't think we'd be here until May, but we're here, okay? So this level needs to hold. You can see back in history, the last time we got near it, October of 2023, it marked the bottom. The last time before that, September 2022, it marked the bottom. The time before that, COVID, April 2020, we flashed below it, it marked the bottom, okay? The time before that, 2018, Google what 2018 was, it marked the bottom, right? 2016, right? 2011, and then the only time where we stayed below it was 2008, right? And if you guys remember 2008, I'll give you a hint. Real estate, okay? Real estate, okay? 2008 is very similar to what I'm seeing out of markets today, okay? I don't know if it's going to continue, but this is why I'm saying if we get below 5,071 and with volume, and we break below these 2023 levels from October, that means that we're accepting the break below the 200 EMA on the weekly time frame, and then we're going to start to go back up and retest it. And if that fails, we're going much, much lower, okay? So this is why I'm reiterating to everyone that's watching this video, put the 200 EMA on and look at the weekly time frame. And if this thing breaks, this is just the beginning. And I'm going to support that thesis when we get over to the volatility index. Now, before we get over to the Dow Jones, because I want to show you something specifically on the Dow Jones in regards to the weekly time frame, let's take a look at the NASDAQ. You can see that it also stopped at the 200 EMA, right? Exactly. Probably a coincidence, but probably not. The 200 EMA lines up with some very key levels, okay? One, we broke through August and we broke through April. I think I beat that with a dead horse. But more importantly, this high right here from July of 2023 is actually a support zone, okay? This is the high and the low range high and range low that we just, I'm sorry, my wife came in here. So the range high and the range low, right, that we haven't been back to, right? We haven't been back to since October of 2023. Okay, this is a very key neighborhood, right? When in the Discord we talk about different ranges, we talk about them like neighborhoods, and right now we're back in the 2023 neighborhood, right, that we haven't been in a while, and we're just tapping into it. If the market starts to dig into this area, you really want to see these buyers step back into the market. Now, the big papa, as one of my Discord members would say, is the Dow Jones. The reason why is because the Dow Jones has been leading the charge, right? As far as the downtrend, the Dow Jones started it before everybody. It was accelerated by something that happened in one of its bigger medical stocks. I can't remember the name of the stock, but it was a huge medical stock where the CEO got killed, right? And that's what started the dump on the Dow Jones early. The Dow Jones rallied with the rest of the NASDAQ, but did not break above the high after that. And I said, uh-oh, it might be night time. And that's exactly what happened. The Dow Jones also broke November 4th low first. It broke through August and April as well. But more importantly, is this right here. We're slowly starting to trade below the 200 EMA, and we're starting to tap into this neighborhood here, right? So we'll see, to be continued, whether or not these buyers step up or not. I'll reiterate, this level is the most important level of this downtrend and this uptrend, right? Because if 2023 lows break, I don't even know where we're going. Put it this way, I haven't even looked at the chart below 2023 lows because it wasn't in my thesis. But the speed in which we're coming down, the fundamentals have shifted, right? I believe the administration has lost their their mind, right? Agree with me or disagree with me, I think they're crazy, right? That changes a lot, okay? So now we got to start looking at things like, okay, how far can we drop and where are we going, okay? All right, so moving on to the daily time frame on the S&P 500. You can see, just like I talked about in my previous video, right? We rallied, we dropped below the 200 EMA, and this is what you don't want to see on the weekly. We rallied back into the 200 EMA. We failed. We got lower. We came back up. We failed. We went much, much lower, right? And this is why I'm extremely bearish, right? Even though we look like we're at a level that we can bounce, I'm bearish until we get above any type of swing highs on the daily time frame, right? That means that we got to come up 761 points for me to flip bullish. That's what I'm trying to tell you, right? Like, for me to flip bullish on this move at all, we got to break through a swing high on the daily. And I don't see that happening anytime soon. It could, but I don't see it happening, right? So ultimately, downtrend, everything that I'm going to give you on the daily, I've already given you on the weekly. So I'm not going to beat that down too much, right? So let's move over to the daily time frame on the Dow Jones. And you can see, again, all of that bearish activity is being confirmed on these daily candles. I mean, anytime you see daily candles, right, that come into the market and they close at the lows, right? Historically, what happens on Friday continues into Monday, right? That means that these sellers were so aggressive, right, that they closed at the lows. It's rare that happens, right? Because normally buyers want to buy up to get ready for Monday. If we see a gap down on Monday, I'm anticipating the same thing that I was anticipating last week when I said I wanted to see a gap down, right? And then a rally up over the next 2 days, and then I'll re-gauge price on Wednesday or Thursday when, you know, the tariff announcements come. We ended up getting that. We got the gap down. We rallied up for 2 days, and then Wednesday we went higher, put in that high of the week, and it was just night time. It was night time. So what am I looking for? I'm looking for that same type of thesis, a gap down to rally up or a gap up to rally down, right? We'll see what happens. We'll break down further when we get down to the 4-hour chart. So moving over to the Dow Jones on the daily time frame. Again, more of the same. Not gonna, belabor the point any further other than to tell you how important these levels are, how important this level is, right? Like, I would be shocked to see us trading at 15,000 this soon. Not that we shouldn't be here, just this soon, right? Like, this is a little too soon for my blood. That's why I think, as bearish as I am, I'm going to give my bullish thesis as well, and you guys can see exactly how I'm viewing price. So now that we got all of the dramatics out of the way, let's break down to the 4-hour time frame, and let's go with some objectivity, okay? Not my feelings, not subjectivity. We're going to go with some objective levels, right? So Here we go. Let's break down the top-down analysis here. Let's get to the meat and potatoes. So, all right, zooming out to the S&P 500. This is the instrument I trade, so I'm always going to try to put it first, just depending on how my day is going. First things you need to note on the S&P 500, there is a daily supply zone here, right? From 5,600.25 through roughly about 57.68. It's supply because, I mean, the ultimate supply is up here, but I like it here based off the range that we're developing. We broke through these lows here, continued aggressive selling, created a nice supply zone at 5,600. It's a solid number. It's a psychological hold number as well. There's also a weekly settlement up here, right? If you turn your settlement on, it'll be like weekly settlement up through this area as well. So very, very good level to have price return to. Down below us, we have a daily demand zone, right? At 5,079.50 through 5017.50. That means that we're sitting right now in a 600-point dealing range, okay? So unless something has to shake in here, or we're just going to continue to drop, right? But you would anticipate some type of level of consolidation this week, right? That would at least put in a decent bottom. We have not put in a true bottom yet, right? And I don't mean like a bottom like it's the only bottom we're going to have in this uptrend. I just mean like some type of consolidation on the weekly time frame that says, okay, temporarily we're going to sit here, but we haven't even seen that yet. All right, so 600-point range, and inside of that range, I create my levels off of that, right? So to the downside, what am I looking for? If I want to see more downside, I want to see the market trade up. I'm looking for us to trade up to the top of the range at 52.80, right? From 52.80, what I want to see is about a 5.14% drop into 5,009 on the money, basically taking out this demand zone and then coming down even further from this daily candle. Second level I'm looking for the market to trade up to is the daily fib, right? We trade up to the daily fib, meaning we can't even get back up to the top of the range. That level sits at 52.4775, and I'd be looking for the market to trade down 5.17% into our weekly projection of 4,976.25. I know that number sounds crazy, but I'm just objectively breaking it down. From the top of the range, right, which is the top of the low portion here at 51.91, what I'd be looking for is the market to trade down again about 5.23%, breaking through the daily demand zone, getting through this end wall from December 3rd, and then pushing down to this level. This green line here is the Fibonacci retracement of the weekly fib, which is the first 30% area of that range that we discussed on the weekly fib. You can go back and look at that. That level is at 49.49, and I'd be looking for the market weekly projection to hit at around 49.1975. All right. To the bullish side, which I would much more be a fan of, but again, I'm just going to continue to play the trend as is. To the bullish side, I want to see the market trade down first to go up. So what's below me? I have an end wall from December 3rd, 2023 at 4970. I'd like for people to get very, very bearish, right, to start the week if the market wants to go bullish, right? So maybe we get an aggressive push down, a gap down, breaking through these lows. Everybody goes crazy because we think it's going lower, and then boom, we hit this end wall down here at 49.70, and I'd be looking for about a 5.46% push up, which could be a lot more. Just throwing that out there because of how much we sold off, right? But statistically speaking, the average over the last 7 weeks is about 5.46%. So we'd be looking for the market to return almost right back to the daily fib at 52.4250, which would bring credence to my thesis that we could consolidate this week inside of this range. The second level that I'd be looking for back to the upside off our weekly projection is the bottom of the range at 51.19. Just mirroring what we took off of the supply or the weekly projection bearish. We'd be looking for a push off 51.19, 5.31%, pushing up to 53.92. And I really like this development because it would at least get us back up to the weekly fib and then kind of like continue that uptrend, getting back to the daily supply zone over the next couple weeks, right? That's kind of what I'm looking for, is the market to hold these levels down here after pushing down first, right? I'm still bearish, but I'm bullish down here, just like I said last week. I'm bullish down here, and I'm looking for the market to go up over the next couple weeks, 1 week really in this market, but over the next couple weeks, start to push back up and fill this gap, right? This is called a new day opening gap. I think it happened the day after Trump released that PDF that was horrible, but if we created an in dog here, right? And we have a supply zone here, and we got weekly settlement here, right? So there's a lot of magnet, like the market's going to be attracted to this liquidity up there. So whether they need to go down first to get it or they can just gap right up and go, those are my levels going into the week on the S&P 500. All right, let's move over to the Dow Jones, and we'll break down the levels for the Dow Jones for the week. All right, turn it on the top down analysis level here. Again, levels that you need to know, there's a 4-hour supply zone at 40,445 through roughly about 40,686, right? Below that, I really don't have much structure, so I went and found an in-wall from November 26 at 37, November 26, 2023, right? From 37,848 through roughly about, what is this? The low is 37,822. So that's kind of how I'm using that as a reference point, okay? So what levels am I looking for? To be a bear, like we need to trade up first. So look for a gap up out of this market to push back up to the previous day high at 39,890. From there, I'll be looking for the market to come right back down, targeting our weekly projection at 38,097. And again, picking up that in wall just for good measure. If we push up and we can't even get back to the previous day high, which has kind of been the theme, and we push up to the daily fib, I'll be looking for the market to trade down from 39,522 into our weekly projection at 37,733, taking out this in wall from November 26. If we can't even get up that far and we start to consolidate below the in wall on December 3rd, i.e. we can't get above the bottom of the range that we created last week at 38,549, then I'll be looking for the market to trade down, push up here and trade all the way down 4.65% into 38,570, which would place us at this yellow line, which is the Fibonacci retracement on the weekly time frame of the range that I just talked about, and it's 50%. The green line is 30, the yellow line is 50, and the red line is 70, right? This is the complete, we have to hold. I gotta buy the market here, right? Like I just have to close my eyes and buy right here, but we'll see what happens. All right, so to the bullish side, what am I looking for? Right? We want the market to trade down first. So what liquidity, what area that I have, there's probably more, but this is just what I got, right? The weekly level is at 37,848. So from that in wall, I'm looking for a push up 4.76%. Again, starting to put in a low so we can have a dealing range. That level would push us for the weekly profile at 39,649. From the bottom of the range at 38,550, but yeah, 38,550, I'm looking for 4.67%. And I stopped here for a reason, because that would equal we're at the supply zone, which is exactly where I want to be by the end of the week. If we're going bullish, I want to see price up here, targeting this weekly fib, right? There's a weekly settlement level up here, obviously, right? At 40,350, and then potentially tapping into 40,445 through about 40,707. Those are my levels for the Dow Jones. Let's move over to the NASDAQ, right? We'll get you all sauced up over here on the NASDAQ because it's very similar to the Dow Jones. And I really like the S&P better going into this week in regards to structural setups, all right? We look over on the NASDAQ, and again, the only true level that I have, I didn't mark it, but there's a supply zone here on the 4-hour, and I guess I can mark that while I'm here with you guys. So this supply zone here is the same supply zone that's over there on the Dow Jones, right? So this level here, let me get it all sauced up real quick. I think this was the last one I did, so I kind of like did not put this in. So let me get this here. I'll do it live. We got a there, and then we got this 4-hour right here. All right, cool. So that level sits at 18,458 through the weekly fib. Again, I really like this area because it's the weekly fib and a supply zone, right? 18,458 to 18,713. And you can expect these ranges to be very, very large because the volatility is so high, right? You can see our projections for the NASDAQ on a weekly profile has gone up to 7%. Like we were at like 3% forever, 4%. Now over the last 7 weeks, we've gone up because of that huge drop last week. We've gone up to our weekly range being at about 7%. Now I don't expect us to stay here, right? I'm just giving you the objective range for now, right? So what am I looking for to the downside? I want to see us trade up. So if we trade up, I want to see us go back to the daily fib at 18,051. From there, I'm looking at about 7.26% weekly projection. at 16,737, putting us below that green line and very near to that yellow line that I've already explained in the previous version of the video. From the top of the range, right, it's 17,876, right up in this area here. I want to see the market trade down, go up there, and then trade down to the 16,526, which would be about 7.35%. Now, again, if the volatility index comes down, these levels will be adjusted, but I'm going off the information that I have currently to go off of, right? From the bottom of the range, 17,567, right? We'd be looking for a push up, meaning we can't get back above the low of the range, and we start pushing all the way back down to 16,262.50, finally tapping into the weekly demand, which I think if the market's all the way down here, it might as well keep going and hit the next level where the big buyers are. So I'd love to see the NASDAQ trade down here by Tuesday or Wednesday, and then we could just rally it up all the way back up. So from the weekly demand, speaking of that, from the weekly demand, 7.43% puts us back at the bottom of the range at 17,619.75 from the weekly demand zone. 50% of the range, which is this yellow line, here's the reason why I was kind of explaining this to you guys, because this is the level that I would trade it from. 50% of the range, we'd be going up to 7.28%, which would put us back at the current top of the range at 17,857. And then from the range high, which is this green line here, right, we'd be pushing up 7.10%, right, back into 18,285.25, 7.1%, and then potentially tap into this 4-hour supply zone because it's where the liquidity is. All right. So those are my levels for all three indices. Again, I hope I didn't bore you to death with all the math and objectivity, but that's the way that I view price. And I really, really hope it's helping some people out there because that's my goal. All right. We go into the volatility index and we see what can support my thesis to the downside. I think we see more downside. I'm standing on business. That's how I'm calling it. But if it goes up, guess what? I'm going to be in the trades long too. So it is what it is, whether you believe me or not. The reason why is because just like when we were bullish, right? We were seeing these aggressive candles come down, right? And we just kept dropping. Now we're bearish. And now we're starting to see green candles on my VIX push up. So I don't expect the VIX to give back these weekly candles. If it does, then, Trump probably said no tariffs, okay? But I don't see that happening. And I know deep down inside you don't either. So what I'm looking for is the market to hold the weekly fib at 26,300 and then start to push higher. The first level that I want to see the VIX start to trade above is 37,510. And then from there, I'm looking for the market to tap into the 47s and potentially see the 50s by the end of the week. If we continue this bearish activity, the VIX will let me know that the strength is still with the bears. And I'm going to continue to look to short this market. I'm not going to fight this because this is the first time that I believe we've seen the VIX this low, right? In over, I don't know, it's been a while since COVID. 2020 is where we saw the VIX come down and then we just continued to push down. And the VIX sat down here for quite some time. We've been down here since October of 2023. Now that we're pushing out and we're breaking structure, I don't expect that momentum to stop because everybody that was accumulating orders at the bottom of the VIX was also accumulating the opposite orders at the top of the market. Now they're letting those orders show and they're going to be looking to make profit, which means they're going to be targeting these highs here. The fact that the VIX has not broken August 5th's high while the market has broken August 5th's high and April's low is not a good thing, okay? That means that the amount of selling that was happening inside of the VIX was strong enough to break through those levels without the VIX actually breaking through its structural high, while the VIX still finished very strong, right? Like, just think about that for a second. That means that as the VIX gets stronger, we're not going to go higher. We're going to go much, much lower. So just, take that with a grain of salt or don't, it is what it is. Now let's get into some of the news catalysts for the week. I don't trade news catalysts. I really don't care, but I think you should be aware of the days that you're trading so you understand like volatility could be picking up potentially on those days. Speaking of volatility, we're going to get, none from the fundamental side, right? That doesn't mean it's not going to be any volatility. It just means from the fundamental side, there's no news on Monday. We got a Fed member speaking, Kugler, and consumer credit. Boring, right? If you trade news, you probably don't trade these days, right? And that's okay, right? I'm going to trade every day, but if you trade news, you're probably not going to trade these days. Monday and Tuesday, there's absolutely no news. On Wednesday, we start to get a little bit of news. We got the FOMC minutes, but that's in the afternoon. Again, the market should be positioning itself for that on Monday, Tuesday, consolidate it on a Wednesday, and then dump it or pump it, on Wednesday. But going into Thursday, this is where it's going to get funky, right? And this is why I say we have this entire dealing range that we could just sit into until Thursday or Friday, which will be dope because it's like a 700-point dealing range on some instruments. Because on Thursday, we have core CPI, month over month. You know the drill, right? At this point, you should know the drill, right? You know that this is happening that second week. But more importantly, I want to take you back to something you probably didn't see, right? Because I like to jump through it and then come back. What you probably didn't see is this guy right here, right? This is called the 10-year bond auction. And I can bet your bottom dollar it's going to cause some fireworks at 1:01 p.m. Eastern Standard Time on April 9th. Come back and let me know in the comments if it did. Then over here, everybody's going to be paying attention to CPI. I could bet your bottom dollar this guy is going to cause some fireworks in the market right now because the bond market is very important to the market right now. Do your own research, figure out how bonds relates to stocks and how the stocks are falling and, see what the correlation to the bond market is. And this auction right here is going to tell you a lot of information and it's going to move markets, especially right now. All right, we go into Friday. We got core PPI at 8:30, PPI month over month. We got consumer sentiment and inflation expectations from the University of Michigan. And if you ain't figured it out by now, this report is the fear of the market, right? Like I've been saying it for my last 3 months that this report right here is cooking the market, right? Because it is scaring the living bejesus out of the market. Why? Because it continues to be correct. It continues to tell us inflation is coming back. And the biggest fear of the market is that inflation comes back. Why? Because big banks like to borrow money to get what they need to get done, or they like to lend money to get what they need to get done. Nobody wants to borrow money at a higher pace, so they put it in other areas that is guaranteed growth. Bonds, bonds, anybody? Okay, anyway, so if they can't get growth out of stocks, they move their money to bonds, bonds go higher, inflation increases, stocks dump, right? And we're left holding the bag because retail just buys the dip, all right? It would behoove you to educate yourself so you're not just blindly buying the dip. Instead, you know when to buy the dip, all right? But, my 2 cents. Last week, going into Friday, I wanted to share with you this that most of your typical YouTubers aren't going to talk about. Friday, JP Morgan Chase, BlackRock, Wells Fargo, Morgan Stanley. It is the day it begins. Whatever these banks say will be the reason that we either see the bottom, okay, or we see much more downside. This week starts one of the most important 3-month cycles of this entire trend. Let me tell you why. Prior to the tech earnings that we're going to get here in another month or so, the banks are going to speak, and they're going to be speaking about one thing. It's only one thing investors are going to want to know about. How are you planning to deal with tariffs? How is that going to affect your bottom line? The banks are always going to beat. There's no question they're going to beat earnings. That's not why you pay attention to earnings report. What you pay attention for is their guidance. And what we're seeing out of JP Morgan, Morgan Stanley already in the news, they're already completely against these tariffs. So depending on what they report and what they talk about, Friday, it's not just going to be bad, right? It could be absolutely catastrophic, or it could be the biggest green candle we've ever seen. Because maybe they say something that's really good. I doubt it, but maybe they do, right? Maybe PPI is going down. Maybe I'm completely wrong. But I'm telling you, you need to be aware of these happenings so you're not in the market trying to be that guy that's longing this falling Ginsu blade, all right? That being said, that's a lot of information. It took me 34 minutes to get it out to you guys. I hope it's not too long, but quite frankly, if you think it's too long, hey man, don't watch it. That being said, my name is T. Hobbs. This is The Trader Shop, and I'll catch you guys on the next one, man. Peace.